On the 16th of September 1992, the financial world witnessed a moment of historic significance. A single individual, a hedge fund manager named George Soros, made a bet so audacious that it would go down in history as Black Wednesday, the day the British government lost control of its currency. But was Soros just a lucky investor, or was he a financial genius who saw something others couldn't? The question isn't just about the money he made. It's about the psychology of markets, the clash of belief and reality. Could anyone else have predicted the collapse of the British pound? Let's rewind to the early 1990 seconds and examine why Soros was willing to take on such an enormous risk and how he turned that risk into a monumental profit. Back then, Britain was part of the European Exchange Rate Mechanism, ERM, a system designed to maintain currency stability across Europe. The British pound was tied to the German Deutsche Mark. But what happened when the underlying fundamentals of the pound didn't match the political promises behind it? Soros saw the growing disconnect. The British economy was weakening, inflation was rising, and unemployment was high. Yet, the government insisted that the pound was stable and that it would stay within the ERM's strict guidelines. Soros, however, didn't buy the story. He saw an opportunity, and in the world of investing, the ability to spot mispricing is everything. Is this something you think about when you invest? How often do you question the official narratives? For Soros, the market wasn't just about trading stocks and currencies. It was about understanding the deeper currents of human belief and emotion. The government's insistence that the pound would stay strong was a belief. Soros's bet was that the belief was wrong. In his world, markets weren't just reflecting reality, they were creating it. By betting against the pound, Soros was betting that the belief in the pound's strength would collapse. He began borrowing billions of pounds and selling them in the open market, planning to buy them back at a lower price. That's right, he was betting against the currency. But how did he know he was right? Or was he simply gambling? Here's the reality. Soros wasn't taking a blind risk. He wasn't gambling on luck. He understood something that most others didn't. Markets are driven by beliefs. And when belief doesn't match reality, it's only a matter of time before the truth catches up. So, do you think Soros was a gambler or a genius who simply understood the psychology of markets better than anyone else? What do you think would have happened if Soros hadn't acted on his belief? Would the pound have stayed strong longer, or was it just a matter of time before the cracks showed? Soros's prediction wasn't some wild guess. It was grounded in the understanding that the market would eventually correct itself. The truth always finds its way to the surface, even if it takes time. As Soros placed his bet, the government tried everything it could to stop the pound from falling. They raised interest rates, spent billions of dollars to buy pounds, and made desperate efforts to hold the currency within its agreed-upon bands. Yet, despite these measures, the market continued to push back. What does this tell us about the relationship between governments and markets? Can government interventions really control market forces, or do they just delay the inevitable? The psychological pressure on the British government was immense. They refused to admit that the pound was overvalued. Instead, they doubled down, trying to prove the market wrong. But the more they fought reality, the more the market saw it as an opportunity. This is where Soros's understanding of reflexivity, his famous theory, comes into play. As the British government tried to hold the pound's value artificially, it actually caused more investors to doubt its stability. The belief in the pound's strength became even weaker, which triggered more selling. Soros had created a self-fulfilling prophecy. The collapse wasn't his fault, it was a result of the system's own fragility. In hindsight, do you think the British government could have avoided Black Wednesday? Could they have acted differently? Or was this collapse inevitable from the moment they tied their currency to the ERM? By mid-afternoon on the 16th of September 1992, it was clear that the British pound was doomed. The Bank of England had spent billions defending the currency, but it was no match for the market's collective force. The pressure was too great, and at 7:30 p.m., Britain withdrew the pound from the ERM, the currency plummeted, the government lost billions. But for Soros, the outcome was spectacular. His bet had paid off. He made over $1 billion in profit in a single day, solidifying his status as one of the most famous investors in history. But here's the real question. Should Soros be celebrated for exposing the flaws in the British government's economic strategy, or criticized for profiting from the misfortune of an entire nation? Some have argued that Soros was nothing more than a financial predator taking advantage of a country's weakness. Others praise him for being a visionary who saw through the illusions that others refused to acknowledge. For Soros, the market wasn't a game of moral judgment, it was a game of truth. The truth about the pound was that it was overvalued, and Soros was simply the man willing to bet against the government's narrative. But his actions sparked a fierce debate. Should investors be allowed to profit from national economic crises, or do they have a moral responsibility to consider the social consequences of their actions? Soros himself argued that it wasn't about causing harm, it was about revealing reality. In the aftermath of Black Wednesday, Britain's economy did eventually recover. The pound's withdrawal from the ERM allowed Britain to regain control of its own currency, and the economy began to grow again. But it took years for the British government to admit that Soros was right. As a result, Soros's bet didn't just shake the currency market, it forced global leaders to reconsider their approach to economic stability. But let's pause and reflect on a larger question. If you had Soros's ability to see the future of a market, would you take a similar bet? Would you act on your beliefs even if others called it reckless? Or would fear hold you back? The events of Black Wednesday aren't just a story of one man's success, they are a reminder of the tension between belief and reality in financial markets. Soros didn't create the crisis. He simply saw it before anyone else. The collapse of the British pound wasn't just an economic event, it was a story of perception, psychology, and the battle between the truth and the illusion. The question now is, how much of today's market is still shaped by beliefs, and how much is driven by reality? As markets become more complex and interconnected, these questions will only become more important. So next time you hear someone confidently predict the future of a stock, a currency, or an economy, ask yourself, are they speaking the truth or are they just creating a belief? Because in George Soros's world, the answer is clear. Belief creates reality. The question is, which belief are you betting on? Thank you for joining us on this incredible journey through the events of Black Wednesday. George Soros didn't just break the Bank of England, he broke the illusion that markets are always rational. But what do you think? Was Soros a financial genius who saw the truth, or a man who profited from a crisis? The line between brilliance and opportunism can be thin in the world of finance.
Share your thoughts in the comments. What would you have done if you were in Soros's shoes?
If you found this episode eye-opening, don't forget to like the video, subscribe to the channel, and turn on the notification bell so you won't miss future episodes where we dive deep into the minds of legendary investors. Together, we'll keep questioning, learning, and challenging the way we think about money and markets. See you in the next video, Hidden Investors.